Happy New Year, Bitcoin fam! Ding dong, the 4-year cycle is officially dead. Or is it? For over a decade, Bitcoin has followed a rhythm so reliable it almost became mythological. But did 2025 kill the dreams of OGs and new coiners with a giant red candle where it wasn't supposed to be?
You weren't supposed to do that.
What the fuck happened to the price of Bitcoin last year, and what does 2026 have in store? We are in uncharted territory, but we're not lost at sea. I'm Sophie, this is Satoshi, and we will break it all down for you, so stick around. Every 4 years, Bitcoin has followed the reliable prophecy of the halving cycle, and it went something like this: halving, hype, blow off top, brutal crash, repeat. And since the first go-around, Bitcoiners have literally planned their financial lives around this previously proven theory. Traders, Twitter heads, and podcasters all built their careers on it. Funds modeled entire strategies around it. But then came 2025. No euphoric highs, but also no 80% drawdown. Just something unexpected. So the question everyone's asking is simple. Did 2025 finally break Bitcoin's 4-year cycle? Check out what Jeff Ross has to say about it.
I see people still asking this, is the 4-year cycle dead? And I'm like, of course it's dead. Of course it is. Like, it's not even a question about it.
Technically, yes, but keep watching. There's a lot more to the story.
It died because the economy is not in this 4-year cycle anymore. So the question is what is going to happen going forward? And that's stuff we can probably talk about.
First, let's get something straight. The Bitcoin 4-year cycle was never a crystal ball for the price, as much as we would like to think that it was. It is actually a predictor of Bitcoin's mechanics. Every 4 years, Bitcoin's block subsidy gets cut in half, less new supply hits the market, while demand historically stayed the same or increased. That supply shock drove parabolic bull runs, retail FOMO, and then violent crashes as leverage speculation unwound. Every Bitcoin epoch has had the same movie with different actors, but it's important to keep in mind that there were only 4 halvings in the history of Bitcoin to even analyze in the first place.
We've had limited sample size. It's still a young asset in Bitcoin. So for people to draw conclusions about how Bitcoin has to trade with a sample size of 4 is not statistically significant. Moreover, some of those early examples, as you know, Bitcoin was effectively a science project.
The 2024 halving actually came right on schedule, so naturally, much of the market explained the same playbook. Explosive upside starting in late 2024, a euphoric top in 2025, and then a crash to reset the cycle, right? Except it didn't happen exactly the way that we all thought it would. The price moved up, but not insanely like it has in the past years. Volatility compressed and the blow-off top never showed up. Instead of mania, we got absorption.
As Bitcoin matures, what have you seen happen? You've seen Bitcoin start to slay these, what American HODL calls these sacred cows of Bitcoin. Things like, oh, we'll never go below the prior all-time high, which we did in 2021. Or we'll never make a new all-time high before the halving, which we did.
So what changed? Here's the uncomfortable truth.
I want the truth! You can't handle the truth!
Bitcoin didn't change at all, but the market around Bitcoin did. 3 big things happened. First, institutional gravity. Spot ETFs, pension exposure, balance sheet allocations. This isn't just retail anymore. It's slow, patient capital.
Retail investors historically are very much momentum-based. If it's up, they're buying. If it's down, they're selling, right? Institutions in their plan documents actually have the opposite built in. If it's down and it's in the plan, they actually have to buy to reset to their what they call their strategic asset allocation. And so I think that feature has already started to play into the decrease in the volatility of Bitcoin thus far.
Second, liquidity cycles matter more than the halvings now. Bitcoin is no longer isolated. It trades inside a global macro system. Interest rates, dollar liquidity, sovereign debt stress. We used to never care about this stuff as Bitcoiners, but now the big boys have entered the chat, and it's not just fun and memes anymore. The halving still matters, but it's no longer the only force.
I think the 4-year cycle is being replaced by a 10-year grind. By which I mean, there are big new forces in the world. They started coming in with the launch of the ETF in January of 2024. They were accelerated by regulatory progress in January of this year. We have the growth of stablecoins and tokenization. I think those forces are bigger and stronger than the forces that historically caused the 4-year cycles.
Third, Bitcoin is, as I alluded to a little earlier, maturing. Early cycles were price discovery. This cycle looks more like capital reallocation. Less fireworks, more foundation. It's like we're past the honeymoon phase of our relationship with Bitcoin and have now started to settle down and have a family. And that's actually a great thing, especially in the long run, even if in the short term it feels like you'll never have fun with your boys again. You will.
What I learned in 2025 is that the reason for Bitcoin's existence is more important today than ever. It's not less important because the price didn't hit your target. It's more important because the conditions that created Bitcoin are intensifying. The surveillance is increasing, the control is tightening, and the debasement is accelerating. And so Bitcoin isn't less relevant, it's more relevant than a year ago.
And surveillance is definitely increasing. This is my data broker report. 11 pages. They know every old address I've lived at, phone numbers, family members, even what kind of car I drive. It's insane. And that's why today's video is sponsored by Aura. Scammers, spammers, even stalkers can just buy your personal info, and it's totally legal and so dystopian. Aura hunts down the data brokers selling your info, getting them to take it down and keeps it off automatically. You don't have to go full off the grid Bitcoin mystic and live in a Faraday cage because Aura lets you keep your modern life and your privacy. Aura has packed it all in. Real-time, dark web, and fraud alerts, a secure VPN, antivirus, password manager, 24/7 US-based support, and $5 million in identity theft insurance if anything goes wrong. No other privacy service gives you this many tools for the same price. Try it free for 14 days at aura.com/simplybitcoin. Protecting your Bitcoin and self-custody is necessary, but protecting yourself? That's non-negotiable. Go to aura.com/simplybitcoin and take your privacy back. All right, Aura protects you, but now let's talk about protecting your Bitcoin future, because stacking sats gets a whole lot easier when your miners are working for you and not against you. Would you mine Bitcoin if it were as easy as buying it? Then you should check out Sazmining. It's not hosted mining, it's mining as a service that actually puts Bitcoiners first. You can own a state-of-the-art mining rig, plug into affordable carbon-free energy, and stack Bitcoin just like Satoshi. No middlemen, no markups, and no worries. Saz doesn't tack on extra fees when you sign up, and unlike other companies, there are no rig upcharges or inflated power rates. Their entire business model is based on a clean and simple revenue share. They only earn Bitcoin if you are too. A total alignment of incentives and 100% Bitcoiner values. While some claim simplicity, Sazmining proves it. Let's just say that if you need a compass to find your miners, you're not in the right place. This is how Bitcoin mining should have always been done. Visit sazmining.com or scan the QR code to learn more and start hashing. Here's the answer most people don't want to hear. The cycle isn't dead, it's evolving. Each halving still reduces... God damn it. Nico's literally killing me right now. Each halving still reduces new supply, sets long-term bullish bias, and anchors market psychology. But the clean textbook pattern on price? That's probably gone. Instead of boom, bust, repeat, we're shifting towards liquidity waves, consolidation, and structural upside. So fun. Bitcoin has graduated. It's behaving less like a meme asset college frat boy and more like a monetary infrastructure suit-wearing politician, except way less corrupt.
I think the price is the least interesting thing about Bitcoin, because the reality is you have a real problem. Everyone who's using fiat money has a real problem. Right now, today, listening or watching to this, fiat money debasement is mathematically assured. So what do you do about this? Like, what does this look like? You know, when governments spend more than they collect in taxes, they borrow. When they can't service the debt through productive activity, they print. And when they print, your purchasing power declines. It's just math that when you introduce more units of a money, you devalue all existing units of money. And if the productivity doesn't keep up, prices go up. So this is the problem we have today. And it's mathematically assured that this is the path that it's going to follow. And it's accelerating. So the people that are in charge need to create more money to service old debt and to pay for the promises they made when you elected them. I call it the battle for money. There's a battle for money happening right now. And you are the subject. You're not a participant, you're a subject.
If you're waiting for a perfect blow-off top followed by a guaranteed 80% crash and a clockwork cycle that you can trade blind, you may be waiting forever. But if you understand the shift, you're looking at Bitcoin not as a casino chip, but as a long-duration hedge against monetary decay. Now, before we wrap up the show, let's bring this home with a special message from our friends at Ledn. If you're stacking sats, you need Bitcoin-backed services that you can trust. That's why we roll with Ledn, the global leader in Bitcoin-backed lending. Ledn has issued over $9 billion in loans since 2018 and a perfect record of protecting client assets. Why is a Ledn loan different? Collateral is not lent out to generate interest. No credit checks, funds in 24 hours, no monthly payments, repay whenever you want, zero penalties. And their proof of reserves, verified every 6 months, keeps them transparent. Ledn lets you unlock liquidity without selling. Sign up through Simply Bitcoin for 25 basis points off your first loan. Scan the QR code or click the link in the show notes below to get your discount today. Now, let's wrap up the show. So, the irony is this. The moment Bitcoin became boring is the moment that it truly became dangerous to the existing system.
I think things look very good for a reversal of fortune. So just the way that 2025 surprised to the downside for the US economy, which is still in a contraction, and for Bitcoin, which is bearish, very strongly bearish right now. Although I think it's close to a bottom. I think it's at or near a bottom at these levels. I think 2026 is looking good. And I think that's because the One Big Beautiful Bill Act will finally basically start taking effect. I think the accounting rules that are going to be in place starting in 2026 are going to start taking an effect. And I think people shouldn't underestimate how strong that impact will be.
So maybe 2025 didn't kill the cyclical nature of Bitcoin. After all, the halvings are mathematically pre-programmed. TikTok next epoch, maybe, should be the saying now. The price action last year exposed who was trying to trade it and who actually understands Bitcoin. If you want more breakdowns like this, macro Bitcoin, and the forces reshaping money, hit the like and subscribe and let me know what topic to hit next. Although that topic may be in a couple of weeks after I have become a mother to 2 children. So because Jesus Christ, no. My due date is in 2 days. But seriously, the cycles may be changing, but this story is just getting started. I'll see you in the next one, so remember to stack, slay, and stay bullish, baby.